Right now, as we speak, we are watching an absolutely massive, incredibly intense battle happening with Bitcoin right at the $77,000 mark today. Seriously, the market is teetering directly on the edge, and today's session is absolutely critical for anyone paying attention. Welcome to today's Capital Insider Explainer. In just a moment, I am going to show you the one specific level that will completely dictate whether we smash through overhead resistance and rocket to new all-time highs today, or if we get violently rejected and dump all the way back down toward the $60,000 range. You literally need to know exactly what is happening today, right now, before the market makes its very next move. So let's get into it. Okay, let's dive right into the hard numbers. As of Tuesday, April 28, 2026, Bitcoin is sitting exactly at $77,321. Now, why does this exact number matter so much for your portfolio today? Because we are pressing right up against the absolute ceiling of a massive structural pattern. Over the last 24 hours, we have seen immense pressure building, and over the last 7 days, the consolidation has been incredibly tight. It's like a coiled spring. This isn't just random volatility either, this is serious institutional accumulation fighting against heavy resistance. The moves made today, at this exact price point, are going to set the trend for the entire week. Now remember, we are here for technical education and analysis, so this is never financial advice. But you absolutely need to understand the gravity of where we are sitting right now. The stakes for today's trading session literally could not be higher. The big question on everyone's mind is, will Bitcoin break out today? We have built up an incredible amount of momentum, but we are facing a brutal test overhead. Listen, if you are watching the markets at all, you cannot afford to look away from this explainer today, because the tension in these charts is about to snap. We are going to see a massive move in one direction or the other very soon. So let's look at the actual hard data that brought us to this absolute brink today. Now look at the sheer unstoppable momentum we've seen this month. We're talking about an insane 13.71% gain in April so far. To put that in perspective, this is officially Bitcoin's best April performance since way back in 2020. We've formed a beautiful textbook ascending triangle pattern on the daily chart. For those new to charting, an ascending triangle basically means that every time the price dips, buyers are rushing in sooner and sooner to buy it up, creating higher lows. And on top of that, we are holding incredibly strong above the 50-day exponential moving average. The bulls have completely controlled the narrative over the last few weeks, absorbing every single dip. But the real question you should be asking yourself right now is, who is actually doing all this buying at these levels today? Well, the answer is smart money. Smart money is quietly and relentlessly accumulating. Just look at this absolute explosion in weekly spot ETF inflows. We started April kind of soft, right? Just $22 million in week 1. But by week 4, we saw a staggering $824 million flood straight into Bitcoin ETFs. BlackRock's iShares Bitcoin Trust alone pulled in over $700 million of that entire pie. This represents 4 straight weeks of massive institutional gains. Wall Street is eagerly buying this current price action today. But, and this is a massive but, before you get too comfortable and start dreaming of new all-time highs today, I need to show you a glaring warning sign that just flashed on the technical charts. First, let's make sure we are all totally on the same page about how we measure this. To really understand this major warning, you need to quickly understand an indicator called the MACD. Now, in plain English, the MACD, or Moving Average Convergence Divergence, is simply a momentum indicator. Don't let the technical name scare you. It basically just tracks whether the buyers or the sellers are currently accelerating their control over the market. When the lines cross one way, momentum is heavily building up. When they cross the other way, momentum is bleeding out. It is exactly how we measure the underlying invisible strength of a price move today. And right now, the MACD is screaming a huge warning at us. Boom! Right here, despite all that amazing ETF hype, the Wall Street accumulation we just talked about, and the massive April gains, the 4-hour MACD just printed a bearish crossover precisely as we hit the top of our ascending channel today. This is a massive pattern interrupt. A bearish crossover at major resistance historically signals that bullish momentum is exhausting itself. The buyers are getting tired today, and the sellers are starting to step in and push back. This creates an insane amount of directional tension on the charts. So, with this warning flashing, where exactly are the lines drawn in the sand for today's session? Okay, so the absolute crucial point is knowing exactly which levels matter today. On the upside, we have a brutal resistance zone sitting right between $78,000 and $80,000. That is the ultimate ceiling we must absolutely smash through. On the downside, our immediate pivot support is right at $74,259. If we slip there, just below that is our absolute safety net, the 50-day EMA at $73,500. And what happens if that breaks? Well, we are looking at a fast, aggressive trip down to deep support at $70,000. These are the exact, specific numbers you need to be watching like a hawk today. But here's the thing, technicals don't exist in a vacuum, and the real world is putting massive macro pressure on these charts right now. We have massive global macro forces colliding today, and they are spilling right over into crypto. On one hand, the Federal Reserve just held interest rates steady at 3.50 to 3.75%. That signals they are still highly cautious about inflation. On the other hand, geopolitical tensions are skyrocketing as Iran reimposed controls on the Strait of Hormuz over the weekend. That caused oil to violently surge past $107 a barrel. So high oil prices plus a cautious Fed creates a very tough risk-off environment today. When things get expensive, big money tends to pull back. This macro tension is exactly why we are seeing such a fierce bottleneck in the Bitcoin price. And to make matters worse, there is one more gigantic obstacle sitting right on top of us today. There is a massive, highly dangerous $450 million sell wall sitting directly in our overhead resistance zone right now. This means there are limit orders totaling nearly $500 million just waiting to automatically sell and trap impatient buyers if we push even slightly higher. It is a literal brick wall of supply blocking our path. Clearing this massive wall today and doing it on high volume is the absolute precondition for any bullish breakout. If we hit it and fail, the rejection is going to be incredibly violent. So let's take a breath and look at how all of this builds into our ultimate daily forecast. We have the tight technical setup, we have the intense macro pressure from oil and the Fed, and we have that terrifying $450 million sell wall. What actually happens next? In this explainer, I am never just going to give you a single blind guess because honestly, that is not how the market works. You need to be prepared for the reality of price action. There are exactly two scenarios that could play out today based on very specific triggers. Let's look at exactly what those are right now. Here are the absolute must-watch triggers for today. Scenario A is our bullish case. The trigger here is that Bitcoin must break, and most importantly, it must hold above that $80,000 resistance level. Scenario B is our bearish case. The trigger here is if Bitcoin loses that $74,259 pivot support and closes entirely below the 50-day EMA. These are the keys to the kingdom today. Whichever trigger fires first is going to completely dictate the entire momentum for the rest of the week. Let's break down exactly what Scenario A looks like if everything goes right. If we get that bullish path today, step one is smashing right through that massive 80K sell wall with overwhelming institutional ETF volume. Step two, we officially confirm the fill of that institutional CME gap sitting at $77,540 from the weekend. Step 3, we target the crucial Fibonacci extension level sitting right at $82,126. And if we can clear that, step 4 is an open floodgate run straight up to $85,920. If the bulls take control and break resistance today, this is your exact roadmap to new local highs. But we have to be realistic. If we hit Scenario B, the bearish path is a harsh reality check. Step 1, we get a hard, violent rejection right at the 80K resistance zone. Step 2, that 4-hour bearish MACD crossover we talked about accelerates heavily to the downside, confirming that the sellers have taken full control today. Step 3, we lose the critical safety net of the 73,500 moving average. And finally, step 4, we experience a swift, painful, and highly likely drop, all the way down to $70,000 today just to find some deep macro support. That is the serious risk currently on the table right now. Now, before we wrap up, whether we get the bullish pump or the bearish stump today, I want to leave you with a massive long-term thought just to keep your perspective crystal clear. Legendary veteran trader Peter Brandt just dropped an incredible macro prediction based on Bitcoin's strict 4-year cycles. He explicitly states the next high will be between $300,000 and $500,000 in September or October of 2029. So remember, while today's exact price action is absolutely critical for short-term portfolios and daily momentum, the macro thesis for this asset class over the next few years remains absolutely fascinating and totally intact. So the power is totally in your hands to watch the charts and see exactly which trigger fires. Which scenario do you think plays out today? Are we smashing the wall for the bullish breakout, or are we getting violently rejected for the bearish drop? Drop your exact prediction in the comments below right now before the market makes its final move.
And hey, if you want to stay ahead of the smart money every single day, hit that subscribe button immediately. Thanks for joining me on this explainer, and I will see you next time.